China is in terms of technological development on par with the West basically, and has become much more resilient and independent through the pressure to do it themselves. And I think the same will be true for India.
I'm Yuri Bender, and I'm delighted to welcome you back to our Tea Break video series, where we analyse some of the week's wealth management talking points over a refreshing cuppa. It is my pleasure to introduce Beat Wittmann, who once served his time at the Holy Trinity, UBS, Credit Suisse, and Julius Baer, before becoming a partner at Porta Advisors. Great to see you.
Great pleasure from my side. Thank you.
And what kind of tea have you chosen today, Beat?
English breakfast tea with no milk and no sugar.
Aha, so no fripperies there.
No.
I've gone for the English breakfast tea as well, because I think a bit later we'll be talking about the potential revival in the UK's fortunes, because these are challenging times, Beat. And we have an interesting opinion piece which we carried from Anne-Marie Regal, founder of Avrio Wealth in Singapore. Are you seeing some of your clients moving their assets away from the US?
The recent geopolitics and the turmoil with tariffs and the attack of institutions like the Fed and the courts, and of course the foreign policy has created a lot of bad sentiment. It's very clear that fund flows are leaving the US and are flowing into hubs, be in Asia, be in the Middle East, but also of course about Switzerland. And I know from the banks there who serve US clients that they have a growing book of business. That's very clear.
Should we be surprised about the recent tariffs on Switzerland, which President Trump announced?
The only surprise for me was really that our government was so surprised or even shocked. I think it's pretty predictable what the agenda is of the Trump administration. They're also pretty open about it. It's really zigzagging. And tariffs are the most beautiful word in the vocabulary. So that's all outspoken. The larger you are, like China, the more shielded you are from that type of pressures. And if you are, of course, a small country like Switzerland, politically isolated, very rich, then, of course, you have to be prepared for this type of announcements.
Because we had a very interesting piece right on this topic, Beat, from Michael Jarvis at the Trust Accountability and Inclusion Collaborative. He actually attended the 4th International Conference on Financing for Development in the most beautiful southern Spanish city of Seville. And there were representatives of nearly 200 governments there. And their conclusion is that banks, countries, societies, businesses have to look at a much more multilateral format. Do you agree with this sentiment, Beat, or do you share the widespread belief that all key global decisions are now made in either Washington or Beijing?
The big theme really in capital markets and in the global economy over the next few years with these trends that we see emerging is fragmentation, and that capital is being concentrated regionally, really. The world since 2008 was really dominated by inflows into the dollar room because dollar risk assets performed by far best, equities, bonds, alternative assets, the dollar itself. 70% of the world equity index market cap is US. That's just huge. Traditionally, on average, it was 30-40%. So we have a big rebalancing going on and capital repatriation away from the US into Asia, into Europe. And with that comes the multilateralism you mention here. And then these regions strive for strategic autonomy. The Chinese had this plan 2015 to 25 to achieve strategic autonomy, and they simply executed. They did it well. The Europeans are lagging, but they have all the resources. Political will is still lacking to some extent, but it's going to happen the next 3, 5, 10 years. And that means also that capital capital flows go into regions, and the economic development will be accelerated and more autonomous when it comes to technology, to energy, to all these critical infrastructures, and less dependency from the US.
And this picture, which you vividly painted there, Beat, it is reflected in the dominance of the US financial institutions, of the likes of BlackRock, Invesco, in asset management, and JP Morgan, Bank of America in wealth management. So it was a pleasure for us to see the expansion of a European institution, BNP Paribas Wealth Management, who are really making some waves at the moment under Vincent Lecomte, their CEO, and my colleague Ali profiled that institution. They've sold their US assets and they're focusing very much on Germany with the purchase of HSBC there, and they've been increasing assets very significantly in Asia as well.
European banks' investments and valuations in the US, they have never really had success in the US. So I think it's a very smart strategy to do this. And, you know, when you talk about enlarged Europe, and then you reach out to the Middle East and to Asia, these are very, very large markets, highly developed, rich, and a lot of potential to develop business, no doubt about that.
The UK property market used to be a one-way ticket to success from 1980 to 2016. It was 8% a year. Now, London can't even keep up with inflation. We had an article, my colleague Ali again was writing about this. Is this an indication that London is losing some of its attraction as a financial, geopolitical hub?
I love London. That's a disclaimer. I've been working here for the first time, I think, in '86 when I joined UBS. That was the time of the Big Bang, and the US acquired Phillips & Drew. So I have very fond memories throughout these decades. But now to the facts, Brexit from a purely economic point of view, and I'm talking here about economics and capital markets, was of course not helpful, highly damaging. I think that this very bad sentiment is reflecting a kind of worst moment behind us, not only in property, but in all kinds of, economics around that. And London remains, the one and only truly cosmopolitan city in the world. The UK is really able to deliver very valuable contribution here in terms of industrial base, in terms of this defense industry. When I look at the meetings now between France, the UK, Germany, the UK, and also in this Weimar triangle, I think things are really improving from a political point of view. And everybody's realizing that we have more important strategic issues for our continent, really, not just the EU, but the entire continent to deal with in this pretty hostile world surrounded by China and Russia on one side, and then the very transactional and utilitarian US administration.
And you mentioned these great powers of today, the US, China, potentially the EU, India, obviously a rising power as well, and Trump is now threatening to sanction India for purchasing Russian gas. Do you feel that will severely dent India's growth prospects?
It's just too big, just too sophisticated. And we saw it with China, when the US really blocked technology transfers into China already 10 years ago, and then increasing, of course, and in the Russian context, the EU similarly. It has structurally strengthened China. China is, in terms of technological development, on par with the West, basically, and has become much more resilient and independent through the pressure to do it themselves. And I think the same will be true for India.
For our viewers in India and China, there is still a battle about who makes the best tea, the Indians or the Chinese. And Beat, thank you so much for joining us today for a fascinating discussion.
Thank you. My pleasure.
And sadly, that's all we have time for. We're going to carry on discussing these issues at our Global Wealth Management Summit, which will be held in London on the 5th and 6th of November. Further details are available on the FT Live website. We'll also be holding a taster webinar on Wednesday, 24th of September, where we will be discussing these geopolitical factors which we engage with Beat today. And I invite you to sign up for both events. But I look forward to reconvening with all of you in early September, when normal service will be resumed. And we will continue to discuss the big ideas relating to wealth management.